Hiya folks, it's James here. Quick update without camera because my camera's not working properly, but that's okay. It's a quick update on the charts. Let's have a quick look. Natural gas and oil are the big movers yesterday. Natural gas has slumped down along with oil. We've now squared off all the oil positions, taking both the longs and the shorts off down here. When you look at Brent crude oil, you can see it's a sensible area. We reached down into that support level and the sort of order block into the gap there. And on WTI, we just reached down to the bottom of the range. I've still got one small short position on WTI, but I'd like to add some more back on. I'm looking for a move back up to the 20-period moving average or the channel center line here to add some more shorts. I'm not sure if we'll get that. I hope that we do, but if we don't, we're short already anyway. Probably not with enough size right now, considering the potential for the downside, which I expect to be back down towards $50. At the same time, natural gas fell back down to the bottom of the falling wedge, negating the fractal from the previous move out. But if we shift this fractal along just a little bit, you can see it still makes sense if we bounce out of here. I'm looking to unhedge here as soon as it's safe and as soon as it confirms that the bottom is holding, and you can see that maybe we're just trying right now. On metals, I'm still long on gold, but I took some profit here at the 20, and we're now moving higher. I still have a small long position on, but I don't know if we're going to be able to push up much higher through the 50-period moving average. A lot depends on what happens and transpires in the next couple of weeks with the Straits. I've now taken profit on all the shorts on the silver trade, unhedged it, and released the long side. If gold holds its 20-period moving average and gets up through the 50, it should drag silver up with it too. But I think silver could do even better, considering munitions and industry maybe sparking off a new rally. I'm also long on copper for the same reason, and I'm considering adding more longs to all three of these, gold, silver, and copper, but I'm not interested in platinum at the moment. On Bitcoin and Ethereum and XRP and all the rest, gangbusters higher. I've not adjusted my trade positions. I'm hoping for Bitcoin to move up into the blob, where I will hedge or take profit or something like that. Now that we're above the 20 and the 50-period moving averages and the channel center line, in what is still a bear flag, we should move up to the top of the bear flag, and if the bear flag is valid, we should reject there and move down and follow the red path downwards. If that does happen, I'll drag this arrow up to here to give me a projection for the downside, and that would bring the downside target to about 48 or 49,000 on Bitcoin. All the other major and minor altcoins will roughly follow suit. On NASDAQ and S&P, we've just taken some profit on the NASDAQ, having reached up into a major resistance level with a 100-period moving average. This red or pink channel top, a little bit messy, but nevertheless the structure's still there, and so we've taken half of our profit here. Allow for a 50% correction from here, and that would take this back down to somewhere near the channel center line at about 24,000. It's possible we won't get that deep, and we'll only get a 38.2% correction, and that would take us down to 24,300 roughly. And if this really does have some legs, we might bounce off the blue trend line and the confluence with the 200-day and 50-day moving averages, which are right here at 24,645. If this trend is going to be strong, we should reject here and bounce straight out of that level. So that would look something like that and out, or potentially slightly further down and then out from there. Best played by looking at the 4-hour candles and looking for a reversal candle on the 4-hour chart, and you can do the same on the S&P. The S&P has also reached up into resistance, but we still don't have much profit on this one, so I have not adjusted it just yet, and also the position size is a little smaller than the NASDAQ. And then finally, the dollar has dropped down, of course, because of the moves over the weekend and the ceasefire agreement, and I don't think for a minute that this ceasefire is ironclad and cast in stone, and I expect there'll be several or multiple breaches of the ceasefire, and there's also a possibility that it won't hold and that it won't resolve. Anything that goes wrong and heads back the other way will send the dollar scuttling back up higher, and nevertheless, I think we've got to close this gap to some extent anyway. And along with the NASDAQ, I've taken some profit down here at the confluence of the 100, 50, and 200-period moving averages, looking for a bounce back up into the gap. I'm not sure if we'll completely fill it to get short again and ride this back down, and my target for the dollar is back down to about 92 and then eventually 88. You'll notice there are stock names on all of these pages, which I'm not going to go into now, which we'll cover in the private group as usual. And swinging across to the 10-year yield, that also gapped down, which is pretty good news. And we did hold that black line level once again. We've gapped down below the 20-period moving average, leaving a gap behind which might need to be filled, and heading lower. If things keep going in the direction that we are moving in, and peace is achieved in the Middle East of some sort or form anyway, and considering the massive amount of expenditure and money printing that's going on, I'm pretty optimistic about the markets. Take care. This is going out to members first, and when it goes to the public, make sure to like and subscribe, and consider joining the channel for only $1. And for that price, once a month, you get access to all of the members' stuff here on YouTube. Take care. I'll speak to you soon.